Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 28th of January. All right, now just a bit of a catch up from last Friday as we were off the national holiday yesterday. The Friday Canadian retail sales figures stronger than expected. Give the Canadian dollar a little bit of a bid tone. But that's been a little bit short-lived as the dollar has gone through the roof. Now, just looking at the key, there was only sort of a few things out yesterday, Monday. IFO business numbers really weak, right? These are pretty important numbers, the German IFO numbers, and that sort of assisted. I've got the ball rolling to the downside for euro, and that's also continued as the whole contagion virus situation with the coronavirus. As you can see, that contagion effect is hitting equity markets across the board. Obviously, yesterday, US equities down 1.5% to 2% up the top here. You had European equities off over 2%. And today they are woofing into the Asian equities, although they're only down about 1% at this stage. You'd expect Shanghai, the Chinese Shanghai Composite, down 3%. Okay, so keep an eye on the equity markets. They are sort of directing where things are happening. Now, if I give you a bit more of a look at this on a bit of a closer look on the risk on, risk off profile, as you can see here, like the gold's sort of dribbling off, hasn't really been moving that much in the Asian session, but Asian equities, they are sort of getting hit at the moment. The North American one's at the top. So I know it's sort of middle of the day here in the Asian session. The Asian, well, dollar yen isn't really sort of shooting down too far. So just be aware, Asian equities are moving. The currencies are starting to stall a bit. If anything, you're looking at the correlation matrix here. I've got the S&P minis here. The yen and the yen crosses are the ones to be looking at, right? They are the pairs correlating very closely with the move down in the equity markets. So keep an eye on that. You'd think like Aussie yen in particular, very close connection with the Chinese economy. Throw on a bit of safe haven, tourism and all that sort of stuff. It is getting walked down the far side. Now, if I just bring you over to the charts, you want to sort of piece this together and see where things are really sort of moving, what's real and what's not. Now, euro dribbling lower, economic conditions, uncertainty from the ECB from last week. A little bit of a strong dollar situation there as well. And that's because, once again, the US is, it's a circular system. It's pretty complete and relies less on imports than anyone else or exports. So basically the dollar is being a bit of a safe haven. Kiwi just cruising lower there with the Aussie down as well. Sterling, it's doing its own thing, trading sideways. It's, with various Brexit news, we're starting to see the UK fundamentals impact, but at the moment it's doing its own thing. Dollar CAD cruising to the top side. Check out oil back at $53. I mean, this is a pretty big move and putting upward pressure on dollar CAD, despite the strong, as I said last Friday, strong Canadian retail sales figures. You're looking at dollar yen. Now, this is the surprising part, right? So the coronavirus sort of started coming out. They started buying the yen, and then there wasn't a hell of a lot of movement. Now, the open on Monday, we've had a bit of a 20-point gap here. It's not anything significant, but the price action here tells me the market doesn't seem convinced about this, and it isn't really running that far. So just be aware, before you start running around throwing on positions in all the yen crosses and these things, make sure you do your homework on which yen crosses are moving. And that's where that correlation matrix really comes back into play. So we've got a couple of things going on here. If I just give you a look at the news page just quickly before I get you over to the MyFX Trading Hub, we've got there's a couple of things. Obviously, the US-Canada warn against China travel. Okay, that's sort of pretty important because that has a flow-on effect. But you've got to look at the globe as a situation. How many people are really infected? I mean, the Chinese news services are saying, 106 people have died. There's 4,000 infected. I truly can't believe those numbers. I mean, 1.5 billion people. I bet there's closer to 1 million people infected and hundreds of thousands dead. But anyway, we'll have to sort of wait and see what the actual factual news says, despite my opinions. One versus losses. So I'll just give you once again another look at the yuan. This is where, this is a real sort of move. You're looking, I think once this settles down, we're back up here towards 7 again. It's like a 15-point move overall. That's pretty significant. Obviously, China is going to feel the worst side of this if it does continue. And if I just give you a look now at the technical side of things from the MyFX Trading Hub, the dollar index, it's cruising to the top side of this stage, strong dollar. Now, obviously, that's dollar yen has decoupled that with the safe haven trade. It's really not racing away with it. So don't get too caught up in that. And dollar Swiss, to me, is really trading sideways. Some of the oscillating tools suggesting it's a buy at this stage. I don't think so. You're not selling Swiss just at the moment. To me, it's trading sideways. Dollar CAD cruising to the top side. Oil falling. That's got to continue to push that thing up. And if I come back across here to euro, I mean, this thing technically is breaking down. I can't see how the oscillators are saying it's a buy. It doesn't work for me. Sterling, overall sideways on a trend sort of side of things. It is drifting lower with that dollar strength. And the two Antipodeans, the Aussie and the Kiwi, both cruising to the downside, really coming under pressure with the as this coronavirus sort of spreads. All right, so what do we do from here? Well, we're going to keep an eye on the geopolitical situation, that's for sure. Obviously, keep a very close eye still on the fundamental data. Now, the euro is sliding to the downside. If we see any major hiccups in the Spanish unemployment, well, that's going to put further pressure on the downside in euro. And then we've got two sort of decent-sized US numbers, durable goods and consumer confidence. Keep an eye on these two numbers. They come out an hour and a half apart, but that's where we might start to see some numbers add up. These numbers are strong. It goes with the current move in the dollar. We'll see euro, Aussie, Kiwi, and a few of the other pairs fall. The dollar CAD should continue higher. Dollar yen, well, it's caught between a rock and a hard place at this stage. Market conditions, well, this is where it gets a little bit tricky because you can't exactly see where the activity starts and finishes around those geopolitical events. So I've got the activity is average. Market drivers, well, of course, the China virus concerns are escalating, and we've got our two old nemesis there as well. Now, Brexit, UK is supposed to leave the EU by the 31st. Hopefully that gets drawn up and signed and all done. Then we can get this off the pages. Of course, the Brexit deal they do, which they're rolling back like 6 to 12 months, that will have some implications. But to me, it's a very positive step that they've got it done. The UK fundamentals are already coming into play, so that's going to be a really good thing. This Trump impeachment is still there. It's right in the headlines. The Democrats and the Republicans are arguing over how they're going to, about witnesses and all sorts of things. So keep a close eye on this. The Donald isn't out of the woods yet. It's a long stretch for him to be impeached, but you never know. So just keep an eye on these things. And this is why trading is a little bit average at the moment, because we've got geopolitical events driving the markets. All right, guys, that's pretty much it from me. As I said, the markets at the moment, but it's come back to that risk on, risk off sort of template. They're a little bit tricky, right? And the mood of the risk on, risk off situation is sort of shifting as we go through the day. Now, middle of the Asian day, the Asian equity markets, keep an eye on these. If they continue to fall, well, then this thing is probably going to escalate, and you might see that tickle into the European equities down the bottom here. If we see another day of equities down plus or down more than 2%, this is going to really impact things. And if we start to see the US equities starting to tumble aggressively, well, you know what? This is where the real fear comes into play, and things will get loose, right? When I say loose, very high volatility, a lot of fear in the market. The media outlets love it. They love to push the fear. It gets people watching TV. But anyway, we'll see how that plays out. I wouldn't be surprised to see a turnaround from these US markets yesterday as things stabilise across the equity markets. But we'll have to wait and see how that goes. All right, guys, have a good day. Cheerio.